All right. Hi, David Prince. Hi, everyone who is with us live here, whether you're on YouTube or Twitter or Facebook. Welcome to everyone. I'm Greta Wall. I'm your host for today's event. I'm getting a little bit of an
the
echo
little
here.
feedback, right?
Let me try to figure out. Apologies to everyone. Oh, there it is. I had the tab open on YouTube. All right. So, welcome to everyone for today's event. We're going to be talking about previewing 2024 with David Prince, looking a little bit back on 2023, et cetera, et cetera. So if anyone has any questions on YouTube, go ahead and submit those as they come in. David and I will talk about them. So let's just get started. Let me share my screen here. We have just a few things to show. Here we go. All right, so kicking off 2024 with David Prince. Today's January 2nd. It's the first trading day of the new year. So we're 2 days into the year, but this is the first day that we're getting to do any type of trading. So again, welcome, David. David is the leader of T3 Live's Inner Circle virtual trading floor. And again, welcome to all of our live audience members. So let's get to know David just a little bit here. Who is David? He's the leader of Inner Circle, of T3 Live's Inner Circle virtual trading floor. Looking back on David's career, he was a club owner back in the early 90s before he got into the financial profession in the late 90s. We say financial professional since 1997. He's a previous hedge fund manager, and then he joined T3, found T3 Live through Scott Redler's actual Alpha Team virtual trading floor, and then came up with the idea to make the Inner Circle, created the Inner Circle as an exclusive trading room to be with other fund managers, larger family offices, people who he feels align with him and his own trading. David, do you have anything to add to this and who you are?
One thing that helps us is a big part of my career was private equity and more so venture capital. So a lot of deals and sometimes stocks we even buy have been deals where I have a little bit of more insight than I would typically as just a straight stock investor. So we've done a lot of VC in cannabis, in China, in biotech, and kind of aids the process a bit from time to time. Had about 6 or 7 exits in the public market.
All right, great. All right, so let's move on to the market. Let's just look back on 2023 a bit. So here's your S&P 500 chart of the year. You can see great gains for 2023. The SPY was up over 26% last year. The Qs obviously led the way, up almost 55% on 2023. And then, got the small caps that caught up there at the end and posted that nearly 17% gain for the year. David, let's just talk about you and your own performance. How would you grade your performance last year in 2023?
Oh, that's a lame question. No, God. All right, here's my direct answer. I would grade my performance as a B. I think, with all due respect, I think other people will grade it with an A+. We had a hell of a year way before October ever happened. Starting in January and February, I was quite bullish. But for myself, the whole thing about holding your winners and selling your losers, selling my losers, not an issue. But we were in the right stocks at the right time. Tesla 107, Nvidia 140, 150 before the rally started. And I could have definitely held some of my winners, Meta under 100. A lot of these just kept going. So I'm going to go with a B+ because, I was back in, but there are a lot of winners I should have just stayed in and made my job a lot easier. So that's probably why it's not an A+ for me.
Okay. What would you say were the strongest things about your personal trading in 2023?
I would say having a macro thesis of our own in Inner Circle, where it was more about risk reward, where the markets were, and not listening to CNBC and the talking heads. I actually listen to CNBC, but I mean not following the crowd. So really looking at the Qs in December and saying, okay, here we are, and everyone is saying you can't buy tech. We are about to go into a interest rate hike cycle, and the last stock you want to own is a big cap tech stock. And I just simply said, so if that's what everyone's been saying for 8-12 weeks now, and it is about the most obvious Fed, like the Fed is so transparent. I mean, I'm used to the days of Bernanke and Greenspan and briefcases. I'm like, now they tell you everything they're going to do 4 years in advance. So hasn't everyone prepared? So where's the upside? Well, beyond maybe being short, it's probably to buy cash flowing, decent valuation companies that everyone already sold. That brought FANG. So we were pretty aggressive into FANG. And when you're an aggressive owner of FANG, especially before the rebalance, then you must be bullish the Qs. And that was kind of our mantra from December, January, all through the year. I would say I really expected more of a slowdown than I did, which is why I sold individual names early. But we were there pretty bullish as the year started. And that's kind of what made our year. And then it was adjusting to the market, but listening. So I would say I didn't care about small cap really before the Fed changed. I did. It wasn't until after the summer I said, I really think the upside is in XBI and IWM, which we can get into, but it's also not getting there too early and having money not work for you and be dead. So a lot of it was, hey, this is what's working. Let's not outthink everyone and let's be in the right stocks at the right time, which is Qs, Mag 7 up till like the end of the summer.
Yeah. All right. Before we get into 2024, talk about the weaknesses that you identified in your trading last year and the biggest lesson that you learned as a trader.
So my entries, right? Identifying when to begin a thematic trade, an individual trade, whether it be via chart or fundamentals, is better than 99% of the people out there. Like, anyone who knows me for 30 years will agree. My ability to stay with those trades sucks, right? We're amongst a bunch of chats, and I mentor a ton of people so I can try and look fancy, but it's still something that I need to work on. So my greatest issue is sticking with a thesis and actually letting it play out and not trying to overthink things and overtrade things and lock in gains. So everything I try and teach other people, I still do. Oh my God, look at the size I'm up in the Qs or the XYZ stock or NVIDIA or Tesla. I bought at 107. It just went straight up. I was out, I don't know, 140, 150. My wife followed me. She sold it at 230. So it's just getting better at listening to my own ideas. That's what I need to work on.
All right. Yeah. All right. So now it is officially the beginning of 2024 on Wall Street. As you said, today is the first trading day. Talk about your focus heading into this new year. I'm going to pull up the tweet that you sent out over the weekend on, I think it was Sunday. Yep. And this was what you said your 2024 focus is. You're looking at XBI, Amazon, IWM. Talk about the focus, what you're hoping for or what you're looking for this year.
Sure. So I think what's important though, and where I'm good, is that tweet and the theme behind it went out 3 weeks ago, and I just keep reprinting different versions of it. Pre-FOMC, I looked at the market where we were in the Qs, 370, 80, and I said, if there's upside left to this market, it has to come from somewhere else besides Mag 7. It's just not possible for these stocks to continue to go higher. In my 30 years, it really wouldn't be logical. So it has to come from somewhere else. Where would it come? And I said, if it's going to come, it's XBI, it's IWM. So XBI, after being down in 21, over 20%, 22, over 20. And on the year, we were still down. In 23, I said, gotta own it. I don't know when it works. I'm not going to try and tell you I know there's a catalyst tomorrow, but I know the risk reward adds up here. So in the 60s, we were buyers. And then IWM, same concept. I thought, okay, there has to be a broadening of the bull market if there's anything left. So we went pretty long IWM. And I basically continued with that thesis and said, let's see what our Fed chairman has to say. No one thinks he's going to change the dot plot. He's going to hint that maybe rate hikes are over, but he won't change the dot plot. He won't just give us our cake and let us eat it too. And then he did. And for once, I said, well, rather than take profits, I'm adding. because now the playbook is so clear that unless you're a schmuck, there's a lot of catching up to do. And it's all in IWM XBI. So we added and we upped strikes and continued with that theme. And I said, into the end of the year, I am really concerned. There is huge gains locked up in Mag 7, some software names. And if there's something that's at risk, it's, well, the broad market, because the gains in Tesla, remember I told you about it at 107. The gains in NVIDIA, the gains in Meta, the gains in Coinbase. Well, look at today, right? I mean, they're getting splattered. So I said that's where we have to either be short, or at least you have to be, very light in your positions and really focus on what hasn't worked yet with some real upside, with some real catalysts. So that led me to IWM and XBI, where we were overweight. And then the one kind of big size position I was in is ES puts, SPY puts basically coming into today, which 4750s, which obviously worked out really well. So it was really staying away from big cap till we got through today, tomorrow, because I was telling people, I had a buddy, right? One of my partners, guy was up. He's not watching this. He's too much of a big shot. So I could say it. The guy was up millions of dollars in this Bitcoin stock. And he would say, I'll worry about it after 24, right? I don't want to sell too much. And then another buddy on the chat who's, sorry, I got to turn down the chat.
Oh, all good.
So another buddy who is up, he's on the chat, and he's a real player in the industry, and he basically pointed out Goldman Sachs.
David, I can still hear Kira.
You can? I'm going to just shut it off. Okay. So long story short is I said, he said, you got to buy Goldman Sachs. It was trading at a net asset value. It's always a win when it trades down there. And Goldman Sachs went up 100 points. The guy's up 100 points. Said, I'm not selling till January. So lo and behold, either I know the only two idiots that make a ton of money and don't want to take profits till 24, or the entire market probably was looking at that. And that was our theme. People are going to take profits this week in a lot of these higher performing names. And we got to be short or light these names and a little bigger in small cap tech. I should say small mid cap. Doesn't have to be tech. And that's where we focus today. So the minute IWM was negative, we were buying, right into 199. I think I even bought some right below 199 and 200. And it's 201.32 right now as we speak.
Yeah. All right. So give me your reaction to the action that we've seen so far today. We're almost 3 hours into the trading day. And as you mentioned, things are kind of down across the board as profit takers seemingly.
Yes and no. In fairness, it's actually a bit almost scarily predictable, because I'm not a smart guy and I'm not like a macro genius. And what's happened today is IWM's higher. XBI, I bought $93 calls, below 90 cents. They went to $2 today. IWM's up 2%, trading above 91. My point is, they literally are buying everything that is underperforming from 23. That's XBI. That's IWM.
Yeah.
Moderna, like the face of biotech for a couple of years, is up on the day. We're up 14%. It had an awful year last year. So, and they're selling Meta and they're selling Apple. So today is a bit predictable. They're taking profits. They now don't have to pay those gains till 25. So everyone's all excited. And they're buying the underperformers. Where we go from today, I think, is a lot more where the work has to be done. Today is kind of a little bit predictable. Even oil, which everyone was so bullish on and underperformed, well, it's down now, but I think USO was up almost $2 this morning. So some obvious kind of portfolio management, I would say.
Yeah. All right. The news that we've gotten so far today, you mentioned they're selling Apple. That comes after a downgrade to underweight from Barclays. Give me a reaction to
market perform. So you take it with a grain of salt. I think it was just something was already ugly today because people were taking profits, and then you add in a downgrade. Otherwise, I think they would.
Give me a reaction to the downgrade, though. I mean, the price target was basically unchanged, $1. Yeah. They changed it from 161 to 160. Any reaction to the comments on
if people are
underperformance.
going to if people are going to reach for gains, right? If people aren't scared anymore, when we're just buying Mag 7, right? That in essence, what the market's saying is it's scared. It's not comfortable stretching to companies that have high debt or don't have great cash flow or trade at high valuations. So we are only comfortable buying this very small set of stocks. Now, if they are more comfortable stretching and all of a sudden software is working and Snowflake's working, and it's not just, Microsoft and CRM's working, and then even they're buying Unity, some stocks that I'm not big fans of, and they're buying AI, then guess what? They don't have to sit in Apple anymore. And Apple trades like what? Apple had 4 straight quarters of declining revenue growth, and its PE actually expanded, 30% last year. So, risk reward? No, like who the hell would want to buy it? Now, the flip side is I would have said that 20 points ago. I have no problem saying it, right? I think I even told my mother to sell some 20 points ago, which probably wasn't very smart. So my point is, I can't tell you it's a stock to sell, but I can certainly tell you that there's got to be something better in the market that will perhaps offer you far more reward for sitting in it. To me, it's like a money market fund with some upside. So it's not a bad downgrade, but it's more an opportunity, I think. But it's an analyst taking advantage of the weakness. He's been wrong to begin with.
Yeah,
true. Was that equal weight? Well, the stock went up 50% last year, so I wouldn't say he's a genius in terms of that.
All right. The other news we got today, we got Tesla's fourth quarter deliveries, better than expected, over 485,000. On the flip side of that, from the other electric automaker in the space, we got Rivian's deliveries, and they were down year over year, just under 14,000. Tesla's obviously the leader in this space, going to continue to be, I think, the leader in this space. Do you see anywhere that you want to play either of these stocks?
So first off, on deliveries, a friend of mine, bright guy on my chat, said, is it about demand or is it about production? That's first and foremost, right? If you have a Lucid problem, it's game over. Like, you're actually at this early stage in the EV game, you don't want actual demand issues. So I don't think either were that, right? In terms of Rivian, the stock had a quick move. It literally, when small caps started going, I think it went from 17 to 23 or 24 in a matter of a few weeks. So it was due to come in. In terms of Tesla, I think it really is much more about macro. So as we all know, unless you're really like your head's in the sand and you don't know how to trade, that Tesla far underperformed everything when it comes to Mag 7 and all these top performing tech names. So the question is there 50, 60 points that are going to come to play catch up, which a lot of smart guys I know say has to come, or is the bloom off the rose and it's going to be more of a normal valuation? Normal meaning, not 60, 70 times. It's never going to be traded like a car company at 8 times and go to $50 like some guys say. I just don't believe that. I think it's an Elon Musk company that'll always have a premier valuation. And it trades so heavy for so long, you have to question whether it's a new game, because Microsoft went straight up and Apple went straight up and Google went straight up and Amazon went straight up. And it just, no matter what happened, it couldn't. Maybe it's last quarter. Maybe it was a slowing economy. But now with yields, coming down and with rates less of an issue, there is a bullish case. And yet the stock, every time it broke out, pulled right back. So I think it's really more, does macro win here, right? And do we have this perfect kind of landing and there's no recession and rates come down and you can make this great bullish case? Or do we slow down so much that it's no longer good that rates are coming down for Tesla, but the economy is going to slow down so much, and China, they can't really kick butt, excuse my language, the way, say, BYD is, because they're just killing it in China versus Tesla. And is it like the heyday of Tesla's over? I don't know the answer. But I'm going to let the stock tell me, but I'll tell you, every time the chart gets bullish, it's like 2 steps forward and literally 2 steps backward. It's just like stuck. And it's an option killer for a lot of people, except for So
Yeah.
I wish I'd have a direct answer, but I don't know.
I mean, I don't know is an answer. That is an answer. You talked about, how the Fed surprisingly changed their dot plot and kind of gave us the playbook for 2024. They're saying 3 rate cuts. The market's saying 4. Market's betting on March being the first. Where are you in the March camp for a rate cut?
I think we really slow down a lot, but I also look at evidence. And if you look at Aspen and St. Bart's and the art shows early December and where all the money gets spent, and like Vegas during New Year's, people are spending money out there. So I don't know. I think it really comes down to jobs. And then I have this last little kind of niche that is what I'm really focused on more than anything. I am of the impression that the real estate market has been like a halted stop. And with yields coming in, that real estate is actually going to go lower. I know it probably doesn't sound very logical to a lot of people, but I think that people are finally able to at least think about selling their homes. And I think prices will go lower because they'll finally trade. And I think a lot of people are so set on housing, which is so much of a part of people's net worth and spending patterns. I think housing goes lower. And if I'm right, and it does, then I think the economy can really abruptly slow down and we get those 4 cuts. So I'm really looking at housing, how it holds up. And I am so not a macro economist. So it's just something in my head that I always thought, this is what makes sense to me. It is definitely not a, let's just say, crowded opinion. I think a lot of smart guys out there would say it is a dumb opinion, but it's mine. I've always thought, I still think we have some work to do on the downside. So I think if housing really gets hurt, maybe we get those 4 cuts. Jobs and housing. We got NFT Friday to kind of illuminate where we are on jobs. Yeah.
So how are you? That's my next question is, you say it's jobs. The big numbers Friday. We'll get, the JOLTS tomorrow, private employment Thursday, big number Friday from the Labor Department. How are you positioning yourself and preparing yourself ahead of that number this week?
I am positioning myself as neutral. I think they come in either equal or light, but I don't pretend, like I said, to be an economist. Yeah. And I don't have much of an edge, but my gut is we shouldn't have hot numbers. I don't see any reason from what I'm seeing out there, but there's certainly people better than me at judging how these numbers will come in. So what I really do going into a number is look at my risk reward, right? Where are we in the markets pre those numbers? And given how far we've moved, even with today's small drawdown, a hot number could really shake up markets. I mean, so we came down finally, but we went straight up for 9 weeks. We made a record the S&P has never seen, or the last time was in the 50s. So the risk is there'd be a pretty drastic pullback. So I am basically in the mode where I'm taking profits if I own something at the right price and there's plenty of room to the upside, far more than there is to the downside. I'm not selling much. But if I think they're equal weighted risk reward, I'm taking some profits on a day like today. Example, I bought XBI calls this morning. They almost doubled. I sold a bunch of them. IWM. Sure, I think we're going to get towards 210, 212. But you bet that I sold plenty when it went from 199 to almost 202 this morning. So I'm basically open to it, but I don't know if tomorrow's number will be subdued enough to rally the markets further, or if for some reason the JOLTS shows that, the jobs market's tight and maybe it's only going to be 3 cuts. So I'm basically of the mood that I'm willing to listen to the markets and know small cap and biotech is where I want to be. I don't think we're fully priced in the gains for what I expect this year. And I'm a buyer of dips like I did this morning. But I'm also not willy-nilly where, IWM's just going straight up and I'm buying every day. So I started buying some into the weakness on Friday. But I said to everyone, the 21-day on this chart is $5, $6 below. Leave plenty of room. Because I was overweight and some big size 20 points ago. So I can't tell you just because it came in like $5 from highs, go in. So I'm also, I guess, almost looking for a hot number or something to shake up markets to give entries. So I'd like to see some further downside in big cap. I'm looking at names like AMD and NVIDIA to actually buy at some point. I don't think they go straight down. So a hot number, basically, I take advantage of and be long.
When we talk about that, when we look back on that 9-week rally at the end of the year, the second leg of that really was obviously fueled by the change in the dot plot and the Fed saying 3 rate cuts for 2024. How much of the Fed-related move do you think is already completely priced into this market? So, people that are expecting huge moves higher once those cuts start happening, those might not happen. How much of this is priced in?
So if you're a student of the markets, and this is where I say I'm okay. I'm a decent student because, like I said, I don't know these things inherently. So I try and study. I mean, the markets always look 6 months forward. But if you look at the last decade, everything is sped up. Every bear market is sped up. I get it. The last bear market lasted a long time, but it was also the weirdest bear market because, we had like Mag 7 going straight up. My point is that everyone is so trained to look forward and to figure out where we're going to be 6 months from now that the machines make everything happen quicker. So I'm going with 70% of what people think is going to happen is priced in. And that's why if the markets work this year, it's minimally. And there's probably in 70 or 80% of the market more downside, in my opinion, than there is upside. Because if the whole game is about slowing down the economy and really conquering inflation, I get it. We're trying to reinflate and do rate hikes, but they're not coming for a bit. Then you know what? Earnings probably aren't going to be there. They're just not going to power the markets higher because we're not going to trade like on NAS 30, 40 times across the board. So I think we're expensive. So I think 70, 80% of what to expect is priced in. But if you are okay with not buying the market as a whole and looking at risk reward versus just being long the stock market, like IWM or XBI versus say the Qs, there'll be areas to make money. But I think active money management is the only way you're going to get it. It's not by just hoping the Qs go up 20% next year.
Yeah. Quick reminder for everyone who's with us here on YouTube, just make sure to like, comment. If you have any questions, submit your comments now because, it is middle of the trading day. It is 12:30 on the East Coast, and we're stealing David away from trading. So he does have to get back soon. David, you mentioned earnings, so let's just talk about them really quick. The kickoff is next Friday. Next Friday. Yep. With the big banks, of course, JP Morgan, all those guys, they start it every year or every quarter. Expectations for this final quarter of 2023 before we start getting into 2024 results later.
So unlike small caps, they've performed okay. But
the banks.
Yeah. But unlike big cap tech Mag 7, they're not at new highs, and there are still plenty of stocks way off highs. Citibank, Bank of America, so on. So when you look, if rates are in check, if the economy is not about to implode and housing doesn't implode, then I don't see how Bank of America, Citibank, and some of these laggards aren't where you want to put it in money. The problem is they've gone straight up with the market recently, right? Like I mentioned, Goldman Sachs up 100. But I think dips and banks get bought. And, I was going over with Inner Circle before. I'm like, if you really look at Bank of America, sure, you see that it was low 20s and then it basically just went up 50%. But if you look back into 22, right, and even like early 22, the stock was 10 points higher than where it is now. So if we're going to have a soft landing, if earnings still are going to be pretty solid, meaning, they can generate powerful earnings because rates aren't like hampering the entire market and people can still go out there and spend money and get mortgages and so on, then these are probably the stocks that work. The thing is about banks is they tend to be, they move all at once and then they do nothing. So I kind of feel like I've missed some of the entry there. I was a little tech focused and small cap and bio focused. But if there is a sell-off on earnings, I'd be a big buyer of some of these bank guys.
When we zoom out on this upcoming earnings season, where's your focus personally?
So here's what I like to say. I always say earnings are much more about where a stock is pre the print than often the earnings themselves. So as we go into earnings, if there is a big sell-off, remember tech isn't going to announce earnings till the end of the month. It's Netflix that'll announce the following week after the banks. But most of these big cap tech companies don't report to the last week of the month and then the beginning of February. So a lot of my opinion is going to be where we pull back. So let me give you an example. AMD is far more expensive than NVIDIA. But as a growth story, I get why if rates are in check and we get 4 rate cuts, people still want to buy AMD over NVIDIA because the magnitude of their beats finally this year, when they're finally fully selling their AI chip, they're not going to be NVIDIA, but they might be impressive enough to keep pressing the stock higher, because even though it was up huge last year, by comparison, it trails and it is definitely the number 2 play. So I'm going to look at a lot of like, where is AMD? Is Apple back into 170 before earnings? Where is Microsoft? So a lot of those big cap tech guys are going to be, where are they? I can't tell you, like, I think it was Dan Niles who said this morning, Meta and Amazon. By the way, Amazon's my top pick in Mag 7 this year outside of NVIDIA. But he was like, I still like Meta. Meta was the year of efficiency. Otherwise, I don't see this crazy growth engine that I'm excited about. So if it was just right here, pre-numbers, risk reward, I see nothing I'd be excited about, I'd say. But Meta trades at a reasonable valuation. So if it pulled in another 30, 40 pre-numbers, it starts to get interesting. So a lot of earnings for big cap tech, because a lot of these companies are going to do just fine, going to be where the stocks are pre the print.
And we saw so much of that with earnings last year. If we were rallying into the print, it was very hard to get moves higher. And then same, if you were down into the print and you just maybe met expectations.
And if you're your average trader, right? You're not running fund money and you play these things so you limit your risk only via calls and puts, it gets even harder, right? Because you're paying a premium on top of it. So not to avoid the question, but it's going to be where the stocks are pre the print, and that'll
totally
decide.
Totally. All right. Just talk about your personal goals for the year. We talked about what you learned from 2023. So what do you want to improve on in 2024 for yourself personally?
Without a doubt, sticking with a theme and being there. So I bought IWM Friday. I added today. And I also said, we're under the 8 and 10 day, the 21 days down at 194. It's rising. So I said it might get to 195, 196 over the next couple of days. We're going to have a chance to buy. But I have a basic theory, which is if I like something, a lot of people are going to like it as well. And if everyone's looking at the same thing, they're not going to be like, David, let me get it to 196. So it's perfect for you. And that's where you're going to buy 10,000 shares. So we'll get it there by 2 p.m. Just make sure you're around. Don't go to the bathroom. They never make it easy. If I tend to trade better when I have some thought behind something, meaning, I've really done my work and I have confidence. So if I'm doing that, I'm not trying to be exact, which I'm getting better at, meaning, I'm averaging into something because things don't happen easily, like where they just give you your exact price. And then probably more importantly, because like I said, I tend to excel at entry, is to let my exits happen when they should, not because I'm up a lot of money, and really let ideas play out, because that's where I excel. I don't excel at cute trading, meaning, and there's nothing wrong with cute trading, meaning something breaks out, it's above this line, it's got momentum. I can read a chart, but my point is that's not where I'm at. Where I'm at and where I'm better than a lot of people is understanding what might happen 2 weeks from now. Not because I Nostradamus, because I'm an idiot, but I have a general good, understanding of markets and how people manage money. So that's what works for me. It's now when it happens and I'm right, keep your hands off the keyboard, try and do less and let it work. So that's what I have to work on. Like my wife always says, if I walked away and told people maybe what I think they might or might not excel doing and literally left, we'd be worth hundreds of millions. And I probably would, let's just say, work a lot less than I needed to. So I have to let things play out. That's what
let your winners ride. Let them ride.
I mean, it's simple, but it's true.
Yeah. Real quick, you mentioned AMD being expensive compared to NVIDIA, and you're not the only one saying that. NVIDIA, a lot of people are calling NVIDIA cheap because of that PE
Oh,
ratio.
I should go over that with you.
Yeah, so let's talk about it. Do you think that makes sense? Do you agree that it's cheap?
Not even
Uh,
important. So I have a great answer
okay.
for you. Well, it's kind of arrogant that I think it's a great answer, but it's only from 30 years that I know this. So when stocks go up, right, they have an amazing backdrop to the story, and it's just implicit growth forever and ever. They just go, right?
Mhm.
And the reason they go is because you can't define a multiple. Think about
Mm.
Moderna during COVID, right? You got like schmucks like Steve, I shouldn't say that. You have guys on Fast Money saying it's as important as Apple, right? Literally said it's as important as Apple and
Mhm.
Amazon. And
Yep.
you just keep going. Now, what happens is when you earn a lot of money and then you give guidance and you give concrete guidance that you may beat, but you can finally put a real multiple. It's not like a pie in the sky, coolest story ever. You often go through a churn phase where all of a sudden, because there's a valuation, people can no longer be like, oh, it's the best thing since Studio 54. I'm just going to buy because it's going to go to the sky. So cheap doesn't always mean it goes up easy. And I think NVIDIA is going through that now. So anyone who says NVIDIA, the way it's growing 40, 50% of the year, the guidance they're giving, trading under 30 times is not cheap, obviously is an idiot. But that doesn't mean the stock should go higher. So I think it's going through what I've seen time and time again, where once you can quantify success and give guidance, there's a churn period. My gut is AI is very much the real deal. Scares the hell out of me. I almost wish it wasn't. And eventually earnings will win and the stock is 600 or higher. But in the meantime, it might lag and really take a lot of sellers out and bore people to death because it is going through that churn phase. I've seen it in biotech for years. People put a $5 billion valuation. A drug comes. It's as good as everyone thought. It's producing just as much cash flow, and yet it trades with a $2 billion valuation. People love when it's just pie in the sky. There's no number because there's no ceiling. The minute you give a number, whether it seems cheap or not, you've created a ceiling. So think of it as there is no ceiling. And now NVIDIA somewhat has a ceiling. So it's just taking some time to erode. And that's what I really think is going on with NVIDIA.
Yeah, great point. Okay, the offer that we have for everyone who's here with us live is your ebook. So I want you to talk a little bit about your ebook. You can get David's ebook for free at t3live.com/DP ebook. That URL is on your screen. It's also in the comments. You can just click it to go there. So what do people get from the Hedge Fund Black Book, David?
I think a lot of common sense stuff, less about just lines and charts and more to understand when options make sense, how to value options, how not to buy options in the most volatile of markets because you're going to pay premiums that even if you're right on the direction of the stock, you often won't make money. A lot of the details I think are really important if you want to take advantage of the markets and options, because I think of options as a great way to limit risk while creating some leverage, where a lot of people early in the game think of it as a way to hit home runs over and over and over. But it's actually a way to go to sleep at night and know how much you can lose and know what your absolute risk is while increasing your percent returns. So a lot of it is about how to not overpay for options, to understand when options maybe are not priced high enough. So let's talk about IWM. That was where I focused on options and XBI recently because the premiums weren't crazy because no one cared about small cap and no one cared about biotech. It's all about NVIDIA, right? And Tesla options and so on. Well, when the IV's like that, often it starts to expand when you're right. So it's understanding the dynamics of IV and expansion and when to stay away from options and when there are times that, you can focus on them. And like I said, hey, I might be able to make 200 or 300% on this idea. But at the very same time, I know I can't lose more than 10 grand because that's what you put in. And this is where I get out of the stock. And if I get out of the stock here, that means the option could be 4 or 5 from 10. I'd lose maximum 40 or 50%. So I just think it kind of shows you a great way to use them to create some leverage in your trading while also limiting your risk and understanding how to do so without treating them like, I don't know, like candy. Too many people use options and think of it as just ways to hit home runs left and right.
All right. And again, for everyone, that's at t3live.com/DP ebook. That link is clickable in the comments there on YouTube. All right, David, we're going to close things out here. So just what's your best piece of advice for traders on the first day of 2024 looking ahead?
I think this is important. No one knows anything. So you got a guy like Chase Coleman, home run hitters, one of the best tech investors of all time, kills himself, right? You see what happened to Melvin with GME. And then you got a guy like Leon Cooperman. I mean, just a wonderful human being and great investor. And the beginning of 2023, he was as bearish as they come. No one knows anything. Do your homework. Don't assume that Jim Cramer or Leon Cooperman are going to do the work for you. And I don't think like you want to just fade the masses, but you do want to understand that when something's crowded, it's crowded for a reason, right? Mm-hmm. So here's a great example. I remember thinking about this. So Farmer Jim on CNBC has been on Fast Money. He's been bullish all year. He's been right? Didn't get a lot of fanfare, but he's right. But he did buy NVIDIA. And then when NVIDIA got cheap, he started to buy it. And you might be like, well, that guy understands dynamics of PE and when to buy. But it turns out he actually bought it at the top and it's gone nowhere since. So my point is, it almost doesn't matter who you follow. Everyone gets it wrong. It's a matter of how much risk you take and when you take it. And if you do your homework, I think a lot of what the market's about is common sense. Buy some quality, buy it when people don't want it. Don't buy it when every fundamental is against it, but like use opportunities. So I remember thinking about XBI and biotech. I told a lot of people, if rates are not pulling back, you just can't buy them. I don't care how much I like biotech as a business, but if rates continue to go sky high, these are companies built on debt that are not about cash flow, and it takes time. But the minute I saw maybe the economy topping, I saw catalysts between underperformance and rates coming in. So if you just use your head, use some common sense, and don't buy. How many people said don't buy IWM 3 months ago? Everyone said it's just dead money. Mm-hmm. So don't assume most know anything, because most of us don't. I think there are a few really bright people out there that do, but they get it wrong also. So do.
Who are your bright people?
Yeah.
Who are you following or listening to?
I truthfully never followed anyone in my life. I'm not good at it. But I would say that, and I always encourage people, that there are about 100 people on Twitter I follow with some great insight, some macro people, some stock people that I look at and I think, God, this fellow or this woman has some really good to say. So I don't follow too many people. Feel free to message me on Twitter. I'll tell you who I follow. I think there are about 100, 200 people that are out there giving it free information. Like when people ask about Scott Redler, I'm like, if you want a guy who's great at charts, who really looks at risk, like Scott is not one to buy when something's getting killed and buy more. He really believes in stops and limits risk. I'm like, Scott is awesome with charts and knows how to limit risk. So, and I think the best thing is to find out who fits your dynamic, right? Some people don't like stops and they want what's the most upside, but I'm willing to incur more risk. I think there are a lot of people out there like that. You know, I could tell you all about Tom Lee and how he made a great call in 2023, but that doesn't mean he'll be right in 2024. So there are some special people out there. I love Tony Dwyer. We worked together years ago. He's just a really common sense guy. I love what's his name from Lightshed when it comes to media. He's some of the smartest money out there. My buddy Jason Hirschhorn, who is the CEO of MySpace, is out there. He runs Redef, which is some of the smartest media internet out there. I love the guy who started StockTwits. He's on Howard. He's on CNBC. He's on Twitter. You know, talking his book. There's some really smart money out there giving you great advice. Find them on Twitter or message me. I could give you like 30 names. There's this guy who no one knows. It's like 30,000 followers. His name is Banana. I don't know his real name. We haven't chatted yet.
Oh yeah, I've seen you.
This kid is so
about him.
smart. He may not be a kid. I think he's amazing. So there's a lot of free advice out there that you don't want to take it blindly, but some really smart guys out there. Even if it's only 200 of them, because I know most of Twitter is a bunch of scam artists touting crap. But there's a few really bright people out there who give great insight.
Yeah, and David himself gives lots of great insight on Twitter.
I can't promote myself the same, but thanks.
I can promote you. He really does. So much of what he talks about in the room, he does also go and share for free on Twitter. So he's a great follow. I've learned a ton from David. That 2024 focus tweet that we showed earlier is that's the kind of stuff he's out there just posting for you every day. At Epic Trades 1 is David's handle. So everyone, again, thank you for joining us on today's live stream. Looking forward to 2024, David. I think it's an interesting year.
Starting off really quite well. And this is going to sound weird, but I found out a chat member and someone that was dear to me passed away right before the chat. So if I'm acting weird, it's because their son, literally, it was like 11:58. They're like, I have bad news. My mother passed away. So I'm just a little out of sorts. So if I've been acting strange, I apologize to the public.
Great. You've been great. All right. Good luck with the rest of your day. Good luck with the rest of your year.
Thank you. Everyone. Thanks for having me.